Can you hear me?
Oh, how you scared me. Oh shit. My bad. It's because I have since I'm streaming or whatever, it doesn't make no sounds on Discord. Oh shit.
Oh,
Give me a
let
second,
me.
because this thing's
Oh, there you go.
it's kinda acting a bit weird. Give me a second, okay?
Yeah. How are you?
Good, good, and you? I was sleeping so good,
Good.
bro. I was sleeping so
Good.
good.
So I just prepared my food to eat it
What happened?
real quick before. I prepared my food to eat it
Oh, okay.
before we jump on.
Yeah, that's good.
Yeah.
That's good. I'm just trying to set up. I'm just trying to set up the live. I'm streaming, but it doesn't show it for some reason.
On YouTube?
Okay, I think it shows now. Look, I'm gonna send you this link.
Sure. Are you sending where?
Wait, give me a second. Uh, the my stream on YouTube, just to make sure like people can see it sounds good and everything, and then we can
No,
start.
no. Yeah, sure. You sending here or somewhere else?
Let me send it to you. Give me a second.
Uh,
Are if you're subscribed to my YouTube? Are you?
I don't think so.
Okay, well, I'm gonna just send it to you. Where do you want me to send it? Discord
Uh,
or WhatsApp?
send. Give me your channel. I'll go there.
Yeah, yeah. I just want to make sure that
Oh,
you can see. Yeah, I send it to you on
yeah,
WhatsApp. On
there you
WhatsApp.
go. I got it.
Let me know if you can see, hear everything, and if the quality looks good.
Let me do this.
Nice little
Oh,
candle right now.
oh yeah, I'm not even checking.
Yeah.
I just let it do what it does. There you go.
Let's see.
Oh, okay.
It sounds good. Can you see me? Do I look good?
Let me let me do this. Let me just
Mhm.
for a sec. I mute myself here.
Mhm.
Let me do this. Yeah, I can see you actually.
It sounds good.
Give me one sec.
The quality. Hi,
Uh,
hello, greetings, salutations. Sounds so
speak,
stupid.
speak.
Hello, hi. What's up, guys? Can you guys hear me well?
Give me one second. Let me just turn down the volume on my phone.
Mhm.
Speak now.
Hello, hello. Can you guys hear me? Everything good? Sounds good. Should be fine, in my opinion.
Yeah, I can hear you.
Okay. Okay.
It's well. I mean,
Okay.
it's very good.
Oh shit! I have an alarm. All right. Now let me use. Let me start the space.
Sure. Yeah.
I forgot how to do that shit. I'm not gonna lie. Hold on, give me a second. Create your space. Only you can speak. People you follow. No, only people. What do you want to talk about? Put the title. Yeah, I use
I
welcome. I'm
would
not gonna
I
lie.
would just put the same topic that you choose for your
Yeah, yeah.
YouTube live.
Mm-hmm.
Do you have your like shaving machine ready?
Hold on. Give me a second. My what?
Shaving machine, your hair.
Oh, that's if we hit $7.30.
I know, but you have it
Yeah,
ready. You
yeah. It's
have it
there.
ready.
It's there. Don't worry. Someone was like, shave your eyebrows too. Like, yeah, right.
No, if it hits $10.
Yeah, maybe. I forgot what was the title. Oh, okay, right here.
Let
You
me
know,
go to.
I got it. I got it. And you know the worst thing? I'm gonna start it now. I'm gonna start the space, okay?
Yeah, yeah, that's okay.
Microphone, HyperQuest. Alright, people can hear me.
Okay.
Hello, hello. Can people hear me on the space? Let's see.
Let me join.
Yeah, I started the space. You know the worst thing that if this thing hits 7:30, obviously I'm a shave because my word is like my signature. The thing is that I have to wear its net spawn. And I am the best, or how you say it? Best man for one of those.
Yeah, let me see. Let me send a request.
Yeah, let me see. Oh, where's the spacer? Requested, approved. There you go. I approved you. I don't know if you got the approval. Oh, I'm invite you to co-host. I don't know if you got the approval. Stop, Adam. Adam. Adam Beasting. What's up, brother? Welcome, welcome. Oh my gosh, I'm excited. For the people that is barely joining either the live on YouTube or the space on X, if we hit $7.30 this week with earnings, obviously, I will shave my hair. All of it. I will go bald. So, let's see. I send a request. What's up, Adam? This is so weird. Okay, I must have your request again. Proof. Did you got it?
Okay.
Okay.
Can you hear me?
Yes. Yes, I
Okay.
can. Let me see if I can manage space. Speakers. Invite to co-host. I just invited you to co-host. Let me see if
I saw it, but it didn't go through.
Can you guys hear my dog snoring in the background?
Now that you said, I have to pay attention.
I
Let me see.
can hear her snore right now.
Oh, that was him?
David? Yeah. Like the snore? Like,
Yeah.
that's him. It's okay. He's a little
Yeah,
puppy.
no, that's fine.
I can't really do much. So. Look. Oh.
Yeah.
Oh, okay. You left the space. I was like, what the heck? I mean, you left the Discord. I'm gonna leave the Discord too. There's no point of
Yeah, I
leaving
left the
Discord.
Discord. Just I'm using both on my phone.
Yeah.
I just want to make sure I don't mess it up. Did you send a request
Request?
to co-host?
Yes. I send it to you. Look, I'm gonna try again. I invite you to co-host again.
Okay.
Let me see. I'm excited, bro.
What's that?
I'm excited. I need to get so much better at these things, bro. I'm not used to like streaming or anything like that. I mean, on YouTube. On YouTube. I am.
Okay.
Someone just put on the group. I'm expecting live shaving too. Yeah. Bro, everybody wants me to really shave my hair, bro. Like, you guys hate me or what?
No, I want open door hit 7:31.
Imagine it hits 7:30, then thanks afterwards.
Oh, that
Oh
would
my
be
god.
nice.
Ah, what do you mean that would be nice?
I'll be happy with that.
Let's see. Yeah. Is there like a comment section for the space for people to comment? Let me see.
Yeah, there's a
Oh,
comment
okay.
section right
Oh,
at the
okay.
bottom.
Okay, guys.
Um,
See it. Let me post the link for the YouTube, matter of fact. Or you know how to do it or no?
no, I can do it,
Yeah.
but just send me. I'm still a speaker, not co-host. If you want me to help with like bringing up people, and you can focus on just.
What's up, Elias? Yeah, but I already tried giving you co-hosts like many times. Look, I'm in Bayou again. Do you got it?
I didn't.
What the heck? Okay, let me try this way. Open. Oh, you. It doesn't. You don't show for some reason. I don't know why.
Let me leave the space
Yeah,
and
probably
join
do
again.
that. Yeah, probably do that.
Okay.
For some reason, my this is so annoying. Okay, I'm gonna give you the invite to speak. I invite you to speak.
I'm back.
Hi. Give me a sec. And let me try to give you. Let me try to invite you to co-host. There you go. Wait. Oh my gosh, this is too confusing. I'm going crazy, bro. Invite co-host. Okay, I invited you. Can you see
Yeah,
that now?
I saw it. So, okay. X.
Adam, the fun part, the fun show, it's not yet. It has to be 20 minutes prior to the call. Earnings are barely gonna be at market close. The actual earnings call is gonna be at 2:30, which is 5:30 Eastern time, correct? And then I'm guessing at 2:10 is going to be the fun pre-show. So let's see.
It's all apparently there's an issue with that.
Hmm.
It's okay. Let's just I'll stay as a speaker, but I
Yeah.
won't be able to accept request.
Yeah, that's okay. That's okay.
Yeah.
It's fine. Okay, my stream should be live now for
Yeah.
people. Yeah, no, it's because only people with the link was able to access it. But I'm sure everybody can now. If you guys want to see the stream, everything that I'm watching, you guys can go to my YouTube, which is the same thing, is Kicks and Trades. Or I'm gonna try to put the link right here in the comments of the live space right now in a second.
I'll take care of it. Don't worry
Okay,
about
all
it.
right, thank you, bro. Appreciate you. Yeah, it's because I had put it like as enlisted, so it wasn't showing. Only the people with the link.
I send it.
All right, thank you, bro. Appreciate it.
Adam, that 20 minutes fun part is gonna be 20 minutes before 2 p.m. 2
Or
p.m. starts, like the call starts at 2 p.m. They're gonna have the fun part 20 minutes before 2 p.m.
or 5 p.m. for the people on Eastern time.
Yeah.
All right, we're almost there. Let's see. Oh, we have 7 people watching. Nice. Hi, watching from Sweden. I can't catch the whole episode since it's 10 p.m. here and I have work. Oh, that sucks, man. But it's okay, brother. Thank you for tuning in, though. Hey, Real Open Army. I'ma send you a new link. I think the one that I got you, it was the old one.
Okay.
So if you can
Hey,
delete
Joe.
maybe the comment and then put this new one. Give me a second. I'll send it to you.
Okay. I'll replace.
Yeah, thank you very much.
Yep.
Okay. All right, everything should be fine. Long investor, welcome, guys. Yo, Greek heat. Oh, look at the candle. What the heck? That's okay. It doesn't really matter. Like none of these matters either way. So, but anyways, guys, let's do a quick recap before the earnings. As you guys know, for the people that follow me, we've been tracking this descending channel that was playing out for the past 7 months. Eventually, for the past 2 weeks, we eventually finally broke out and we're flagging right above it. As we can see here, this is a bullish flag, the pull, the consolidation, and we broke out eventually. And right now, this can will be a retest. With this, but it doesn't really matter if it's a bullish flag because if earnings are bad or whatever, I don't know what happens, it can still go down, or up, obviously. So it doesn't really matter. But right now, the setup is bullish and it's a bullish flag. If cash delivers and everything's good, then we can get a nice push. My target was $7.30. The prior move from the prior leg was from $4.12 all the way to $6. That's $1.88 move up. So that's the measure move. That's why my target of $7.30, which if we hit $7.30 somehow by earnings or by Friday, I will shave I will shave all of my hair. Yep. I will shave it all. It's pretty long right now, so let's see. And I have 2 weddings next month, so let's see how that goes.
I can't wait.
There's a lot of people. Oh, by the way, for the people that are here on the space, if you guys want to see my screen and see everything that I'm looking at, the link for my YouTube is on the comments. All right, here we go. Earnings are about to drop any second. So let's see. Let's just wait for the big candle. I honestly don't really care. If it goes to 7, great. If it drops below 5, great, because I get to buy more and cheaper, But I really doubt it. I feel like we're gonna push up. We should push up. I'm gonna delete the MACD and I'm gonna just put the volume so we can see the volume.
I pinned the YouTube link to the top of the space, so anyone who wants to watch, you can use that link.
Yeah. Mr. Soldier Fortune, keep up the great work, buddy. Always awesome to see your updates on X and WhatsApp. Thank you so much, guys. I appreciate you guys a lot. Like, none of this will be possible without you guys. Like, I do this for passion. I'm passionate about it, and I like to help with whatever I know. Okay, here we go. It's reacting.
Joe, I like your posts on X. Keep up the good work.
Thank you, guys. Appreciate everybody. My calls went up in price before close. I was down like $300, and I'm only down $100 my calls.
You got calls?
Yeah, it's the first time that I got calls for open. I got 60 calls for next week for $7. So let's see, just for fun, Bill Miller, Harry's High, everybody, welcome, guys. Thank you so much for the support. So far it's reacting down. Let's see. I'm pretty sure we beat earnings, like both EPS and revenue. Well, let's see.
If any one of the listeners wants to come up and talk about Open Door, feel free to just send a request. Gustavo can approve it.
Oh, I was muted. Whoever wants to come and say hi or anything, yeah, just request and I will accept you. What do you think? Open army? Do we beat or do we
No,
not?
nothing. Well, honestly, I don't care much about like this earning, that earning.
Yeah, me neither.
I just wait like 3-5 years.
Yeah.
I'm okay. But if Kaz is right, you should see good things.
Yeah. Like I actually rooting for you guys because I actually want to shave my hair. Well, not really, but
Well,
it'll be fun. It'll be funny if we hit $7.30 this by Friday. All we gotta do. So funny, all the people talking smack on the comments on Weeble's feed. Oh, they're such morons, bro. They're so dumb. They're like going back to $3, and then you ask them, "Are you shorting?" No, I don't short.
oh,
It is
I
free
never
money.
noticed they're putting in the YouTube. Okay.
Jason is asking, when do they release the earnings minutes? What do you mean earnings minutes?
2 p.m. Pacific time.
Well, yeah. Well, earnings are right now. Usually lags a little bit, and then the earnings call is at 2 p.m. Pacific, which is 5
Did
p.m. Eastern time.
do you remember when they released the reports? Right at when they started the call, or before then?
No, no,
Last time.
they released it like right at close, but usually lags a little bit. Like right now,
Okay.
it's lagging, you know.
Okay.
Like
I'm checking the website.
yeah, if you could send me like the report, so
Yeah.
I can post it. Actually, I want to post it.
Give me one sec.
Ever since I got my dog, my floor is never clean. Never,
Yeah.
never. He's a Frenchie, and he's always drinking water, and he gets his whole like his neck full of water, so he's spilling everywhere. Um,
Yeah. They haven't posted anything
oh, it's reacts.
yet.
It's the cat is reacting a little bit right now. Little bounce. Yeah, if anyone ever wonder who is that dog on my banner on my profile, it's my baby. Little useful, I mean useless information.
Gustavo, I would check to see if there's any requests to come up and
Yeah, let me see.
have a chat. Try to make me co-host again.
Yeah, let me try.
See if it works or not.
By the way, guys, have patience. We are really new at these things, so I'm trying my best. No, I think this thing is glitch. It's glitch because
Yeah.
you don't. Yeah, I think it's glitch. Now there's a lot of people here. Like this is so cool, and I have 16 people on YouTube too. Thank you guys. Like I appreciate every one of you guys. Now this is the most people it has tuned in.
I wish George was here.
So I'm gonna say hi to a few people that are here. What's up, Joe Ostrom? I'm sorry if I pronounced you guys' name. I'm really bad with names, and my accent's really bad. Haley Trader, Gaston, R3D, JB Alpha, Ka Desari Bipum. Oh my gosh, I'm so bad at pronouncing the Javier Carranza, Phoenix B, Hyro, Tang, Barbie True Blue. What's up, guys? Welcome everyone. Let me see.
Welcome, Mohammed, Said, all of you.
Daniel Kim. Yeah,
You can hear me, Gustavo?
yeah, I can hear you.
Okay,
I don't have no request right now.
that's okay. They're all waiting.
It shows that there's 8 people watching. I mean, 8 people that comment on the space, but I only see one comment. Oh, we got Batman here. What the heck? There's a guy named Batman here. Oh, request. Okay, I saw 2 requests. I'm gonna approve you guys. Just keep it cool, you know. Don't say, I'm gonna approve 2 of you guys. All right. So, guys, I just approve whoever requested. It's taking a long time to react.
Hello, Open Army.
Hey, what's up, brother?
Hey, guys.
Welcome.
Earnings are
How you
up,
guys
guys.
doing?
720 million revenue, 0.18 earnings per share loss.
But but it's still big, right? I could barely understand what he's saying.
72 million revenue, 18 cents EPS. I mean loss EPS.
Mm-hmm.
Yeah, EPS up 86% quarter over quarter.
It's taking forever to react, though. Like, this reaction is minimum.
Maybe everybody's waiting for.
Yeah, I usually
Yes.
I usually wait until we will post like the article how much they miss or they beat by. So that's why. Oh, I mean, in my opinion, that's why we haven't seen that much movement. Oh, Randy, site. By the way, I accept your request. I don't know if you know. Sup, Nelson, Alpha Lion, Max, Buko Life, Chance, Yesterday's Party, Alan Paul. What's up, guys? Welcome everyone. Little reminder for the 21 people that is listening to the X Space. If you guys want to see what I'm looking at, which is the chart, I'm streaming live on YouTube. The link is in the comments of the space. Okay, I can see the comments from the people now here. Revenue, yeah, 720 million. EPS minus 0.18. Thank you, brother. EPS. Why do you think there hasn't been any inside purchases? I think they have a period of time which they can buy. That's the only thing I think I can think of, right? Real Open Army.
I don't know about that. If there's any like period that they can't buy, but I can find out. I'm actually looking at the supplemental document they provided at their website.
I'm reading at the image that Raul Andy provided.
Yeah,
Earnings per
yeah,
share.
that was a good summary.
The expected was 10 cents minus 10 cents, and then we came at 8 minus 18, missed by 80%. That's kind of strange though. How can didn't we last time we got like 10 or something like that, and then the expectation was like 12?
Let me see.
I don't know. Let's see. Still taking forever to react. This is a tiny candle, and it's been almost 15 minutes already. So, Joel Trader, I'd love to speak, but I'm currently in a noisy environment. Keep up the great work. The earning report is at 5 p.m. Eastern time. Thank you, brother. Yes, the earnings call. It's at 5 p.m. Not a lot is happening, honestly. Oh, by the way, while we wait for the earnings call, if anyone wants to request HR, like let me know and I'll go over it. I'll try my best to tell you guys what I see. No financial advice, just like quick review. We still have 45 minutes to the earnings call. What you ate? Real Open Army?
I'm just reading.
Oh, yeah.
Hey, Kickston. Is that what we call you?
Yeah, you guys can call me Gustavo, though. That's my real name.
Gustavo?
Yes, Gustavo.
All right, sir. Hey, just wanted to say, y'all can share the space out. See if you can get a couple more Open Army people in here
Oh, yeah.
to listen to your good stuff. I started following you on YouTube, I don't know, a couple months ago. I think you had like 5. And so I watch your stuff from now and again, and you do good with the charts. I'm not necessarily a technical chart person, but I do enjoy watching your work. So just want to say thanks for doing that and your enthusiasm around Open Door. Want to ask you a question if I can.
Yeah, you're good, man. But first of all, I appreciate your comment. Like, like that means a lot, honestly. I really do it just for fun. I'm passionate about it, and I try to be as accurate and as reliable as possible. But it means a lot. Thank you, brother. And yeah, you can ask me
You have,
anything.
you have some people in here, so obviously you are appreciated. Yeah, just interrupt me if you got information. Uh, to say. So, but yeah, man, I kind of wanted to know a little bit of your background. How'd you get started in Open Door?
Mhm.
Where does your passion come from? I'd like to know.
Well, okay, so I'm gonna tell you guys a little story, right? I remember I graduated high school at 17 years old, and I used to hang out with obviously with my friends, and we will always go to car meets. And there was such nice cars, Lambos, Ferraris, whatever. And I always had this idea like, oh, once I graduate, I'm gonna start working, and I'm gonna buy such a nice car, for example, right? I remember by 18 years old or so, I was working 2 jobs. I was working at the paint booth with my stepfather. I was working, and I used to go in. I used to wake up at 4 in the morning, and we used to go in at 5. I used to get back to the house like at 1:30. From 1:30, I had time to barely change, eat something, and then go work at the Italian restaurant that my sister was the manager. And then after that, I used to live all the way until like 10 p.m. So I would only sleep for like a few hours, for like 5 hours, for like a year. I was able to save around $34,000. And like I would save every single dollar. I remember I would save every single dollar. I wouldn't eat. I would literally take a hot pocket, a peanut butter sandwich, and that was my meal at work. And at the restaurant, I could eat other stuff, obviously. Ooh, it's reacting nicely. Let's go. And yeah, so I was able to save around $34,000. And then at that time, it was like around 2021, and I heard all my friends talking about Bitcoin, Ethereum, and I was like, oh, they're gonna get rich. I need to get on it. I want to be rich. So I stopped worrying about the cars. And then eventually I opened my broker account and then put all my money on Ethereum. Literally, I had 21 Ethereums at 1650 average. It dropped all the way to like 800, 700, and I was down for like 6 months or a year. I don't remember exactly. I was down like $22,000, and I held, and then eventually broke even. Then I got in Carvana. Had 3,000 shares at around $13 or so. It came down all the way to $6. I was down again like 20 something thousand dollars for I don't know many months. Then eventually one day it jumped back up, And that same day I was up $29,000. I had done options, I had done shares. I sold my shares on accident because I was so dumb. I was barely new. And then one of my friends told me, "Oh, sell your calls, because And I believe him. And I sold my shares on accident, thinking it was my calls. And I was too dumb to never buy again because I lost my average, which it was really dumb. My average, instead of being $13, it was now gonna be $19. And thanks to that, I lost the opportunity of making a lot of money because Carvana, not even 3 years later, it shot up all the way to $485. So from a $34,000 investment, I would make above $1 million. So that was my biggest mistake. And then, well, when I made $29,000, it was just like mind blowing to me that I was able to make this money at, I remember how old I was. I think I was like 19 or so. I was mind blowing that I could make that much money, you know. And then I think the following week I went in calls and I made $27,000 again in a single day. Then the next week I lost like $35,000, and then it got even crazier. Like 2 weeks later, I think on March, I put like 30 something thousand dollars on calls. Yes, for the weekly expiration. I was working and I made $118,000 in like 5 hours. I was working at where I work right now. I was doing something with some little machines, because we do CNC machining, and I was driving to pick up some tools, and I couldn't believe it myself. Like, I literally made $118,000. So if you guys seen the video that I pinned on my profile, I show all the screenshots and everything, and that's what sparked my passion for it. I wanted to keep going. I don't know nobody. It's not to brag or anything like that, but I don't know nobody that made $118,000 in like their 14th trade. And I'm not saying it because I was so smart. It was luck. It was honestly luck. But being able to do that from the comfort of my phone while I was working, like that's what it sparked my passion for this, basically.
That's a cool story, man.
Yeah.
And you came from, you grinded, you put more important things in front of you than, the cars and the parties and what have you.
Oh yeah.
And you know what I'm saying? And that's what Open Door, I think, is for a lot of people here. I know it is. I know it is for me. I mean, I with Eric Jackson, actually, I owned a stock before because I'm actually in real estate. That's what I do.
Yeah.
So when I started hearing about, Open Door, I bought 100 shares just, in the beginning, just to kind of, before Eric Jackson, hyped the stock, and just to kind of watch it, because I'm in the industry, and then I heard about Eric Jackson and I start watching him. And I start really paying attention to the fundamentals and, kind of what he was saying. And it kind of inspired me to, take a look at these stocks, take a look at this, Open Door on my own. Because normally I have a financial planner, whatever. He doesn't make me any money. But so I decided to do it, on my own,
Mm-hmm.
and really got into it. And Open Door kind of opened my eyes. And plus, I do have a background. And this is going to change the industry.
Oh.
Whether it's going to change the industry within the next 5 years, 10 years.
No.
But I think with Open Door and Kaz, we're going to see results probably within the next 12 to 18 months. That can be life changing.
Yeah.
For those that are early. So that's all I wanted to say. I want to support you. I'm here. If you guys have any questions about real estate or even about Open Door, I know a lot more of the kind of the background and, Eric Jackson. I don't know who follows Eric Jackson here, but he's got a lot of good stuff to say, not only about Open Door, but other things. But, yeah, man, I'm definitely excited about this earnings call. It's going to have a surprise guest or two as well from what I know. I also, I'm a big AI guy, and that's what Open Door is basically, is AI. So I got a lot of got a lot of positions in the data centers and AI stocks as well. So it's happening, and before you know it, some of these stocks that people are invested in, especially Open Door, it's going to explode.
Yeah. No.
I don't see the speakers. Who's this? Who
It's
was talking?
it's Great Hit. Great Hit.
I do have one question. You mentioned that you're in real estate. It would be interesting to hear what I'm pretty sure you have worked with agents. I'd like to see what they think, like towards.
Not happy.
No, they're definitely not happy. You know, they're fighting against it. You know, only because deep down inside they know change is coming. I mean, just some of the agents I work with. I'm not an agent per se.
Okay.
I deal more with investment properties. You know, I'm licensed as a loan officer in like 7 states. You know, so I do loans, but I have like 9, 10 employees. But you know, but regardless, as far as the agent's concerned, every time I mention Open Door, they like step back and they're like, oh, that's nothing, that's nothing. They can't do what we can do. And so there's a lot of hate out there, and you're going to see a lot of FUD from a lot of them. And I'm sure in your comments, you've seen that FUD when you post something about Open Door from those realtors, but they don't know what's coming, because people now, yeah, you got that, life touch, with actually going to meet a person. But I just talked to a guy from Maryland today. He wants to buy investment properties in Ohio, so I asked him, I go, why don't you check out Open Door? And he checked out Open Door, and he calls me like an hour later. He's like, they got properties everywhere. I go, have fun. So, I mean, it's and people that are moving from one state to another, this is great. I mean, my own house here where I live, I put, I did a test, see what they would offer me. And they were pretty much right on target. Can I get more for my house? Probably, but it would probably take, a bidding war and have
Yeah.
to, do the, fix the house and have people come in. And, I don't want that. I know when I'm ready to move from this house, I mean, I'm going to keep this house and rent it out because that's what I do. I move, I buy a house, we live in it. I don't sell it. But
Yeah.
if I were to sell it, I would do that, and actually with some of my partners, we're actually discussing selling some of our, properties, investment properties, that meet the threshold for Open Door. I mean, they want to deal with, higher end homes, if you will, and sell them to Open Door so we can flip the profit and go on to the next one. So not only for individuals and families, but for an investor, Open Door is going to be huge. And I'm introducing it to all my investor groups.
Yeah.
Mhm.
Yeah, I 100% agree. Can I go for a second? You gonna say anything? Reopen?
No, go.
Oh, okay. So yeah, that's great. I love that you're in real estate and like people that are actually in the industry are putting their input and not going against it. I mean, for as long for you, all the people that be hating, I'm pretty sure there are a lot of realtors that are hating on Open, and because they're scared. And it's funny that you mentioned that because it was the same thing with Carvana. Carvana, they're like, oh, they're just a vending machine, but not really because it's the same thing that Open Door is trying to become. You can buy and sell your home through the phone. In the confirm. You don't have to pay for a realtor. You don't have to pay wait months for an approval or anything, which is the same thing with Carvana. Going to a dealership, it is terrible going to a dealership, dealing with a guy that tells you, oh no, the car already comes with the, I don't know, blinker fluid or something, for example, and they're like, oh, we can remove that, or the car already comes with that, So it's really like annoying going to a car dealership, for example, and dealing with them 4 hours, and they're trying to mess you up with the interest, so you end up paying more, and that's what Carvana did. They got rid of that, and a lot of people hate on Carvana, but in my opinion, it's amazing. If you like the deal, you take it. You have 30 days to drive the car. If you don't like it, call them. They come pick up your car and they give you all your money back. Like you never did, like never, like nothing ever happened. So it's like the same thing with Open. That they're trying to revolutionize that. I'm sure a lot of people don't want to be waiting months to get approval to buy their home or months to sell their house. That must be really, really annoying. So it kind of relates. That's why I really like Open as well, because Carvana was my baby, but now Open is my baby, if that makes sense. They're like the same vision in a way.
Yeah, it really seems like it's kind of almost like a carbon copy, but for homes,
Mm-hmm.
because I mean, Open has that. If you don't like it for the first 7 days, return it.
Yeah,
who
yeah,
who does that?
yeah,
Who does that? Open is basically a one-stop shop for a transaction of purchasing a home, or even selling a home from beginning to end. With the economic costs of using AI to save everybody money.
yeah.
And to get it done with the speed of lightning. And it's an exciting time. It's going to take some time. Nobody knows Open Door yet,
Mm-hmm.
but they are starting to talk about it.
Yeah, yeah.
And once it hits,
It's gonna hit
instead
hard.
of buying at $5, $6, you're going to be trying to buy it at 20, 30, 40, $50.
Yeah.
So, exciting times.
And another thing that I really like about Open Door a little more than Carvana, obviously cards they depreciate, and cards most of the times, if not always, they hold the value and they eventually keep going up. So I feel like that's the reason I believe Open Door will definitely be bigger than Carvana one day.
What do they say? The Amazon of real estate.
Mm-hmm. Exactly. We only have to be patient. I know it's really annoying when, for example, one day it takes us a week to go up 20%, and in 2 days we give all the games back. I know that's really annoying, but this is a long term. People want to come here and want this to shoot up like to $20 in one day. We don't want that. Yeah, you'll be great, but we don't want that. We want a slow and steady gains. This is not a meme stock. For example, BYND Beyond Meat. Uh, it went from below $1 to $8 or so in like 2 days, and look at it, where is it now? And everyone calls Open Door a meme stock. It's not a meme stock. If it was, it would be back at 60 cents. But yeah, just be patient, guys. If you guys have a vision, if you guys believe on it, just be patient. That's all we can do. We can time the market. So all we gotta do is be patient, believe, and then little by little, one day it will come. One day it will come. Anyone else would like to request to speak, say anything?
Thanks, Greek Heart.
Yeah, thank you as well, brother.
Hey, I gotta take off. I just want to come up here and support you guys and keep up the good work. And I'll be keeping an eye on you guys. And let's have a good call, and let's hopefully Kaz comes up with some good guidance, for the future, and that starts to trickle up for everybody. So take care, guys.
Thank you
Thank
so
you. Take
much. I
care.
appreciate you. Be safe, brother, and have an amazing day. Thank you. I also want to thank everyone that has recently followed me. I appreciate you guys a lot. I hope I'm easy to understand. I have a pretty bad accent, so.
No, you're easy to understand.
Okay, great, great. I think it's just gonna wait into earnings. Honestly, I was honestly expecting like a bigger move. Mm, but it is what it is. Cause last earnings, I mean, I think this is the earnings that has moved the less. Don't you think so? The past two earnings, it moved a lot, and this time, not really.
Well, it's not dropping.
Yeah, which
I
is
mean,
good.
honestly, maybe
It's just waiting for the earnings call.
if it was dropping, I would say I'll be happy because I'm buying it still.
Mm-hmm.
So
I
I
mean,
don't care.
yeah, me neither. Honestly, if it goes back below $5, I'll be fine with it. Like I want to keep buying. I want to keep loading up. Don't hate me for that. Whoever's been waiting for a nice pump, don't hate me for that.
Um, I wonder if has anybody has seen the Excel file they shared, the last tab segment information, and I'm looking at net loss, and I'm just comparing that with last quarter. I mean, the loss compared to last quarter is obviously it's more than the previous quarters, like Q3 2025, Q2 2025, Q1 2025. But I'm just comparing with the last quarter. The difference is
Not that bad. I think it's because it was adjusted or something like that. I was reading right now on the Weibo feed. Let me see if I can pull out comments. Okay, so this is what some
what
guy on
is
the comments is saying.
others?
He's saying the following: earnings out, pretty decent, double beat through headline EPS may seem like a miss, but 105 million of that is one-time RSU expense on new hires, so adjusted EPS beat estimates by a lot. Could that be it? Because yeah, that kind of makes sense, no? Because the expectation was 10 cents loss, and we came at 18 cents loss. If that was the case, then we will be probably tanking right now, no? Does that make sense or no? What the guy say on?
Yeah, I gotta read it again. I was reading something else.
Yeah, look, I'm gonna say it one more time, okay? He posted the following: earnings out, pretty decent, double beat. Through headline EPS may seem like a miss, but 105 million of that is one-time RSU expense on new hires, so adjusted EPS beat estimate by a lot. That's what that guy posts, which I mean, it kind of makes sense.
I'm reading that others because others were
I don't know, it's confusing.
933 versus 8. I want to see what that is.
Yeah, that's what I always get confused all the time. I see some like weird stuff.
Expenses, depreciation.
Oh, someone request. Let me accept you. Who's requesting? Harry Site. I'm gonna request you, brother. I'm gonna accept you. Sorry. There you go. Hello.
Hello, can you hear me?
Yes. What's up, brother? How you doing?
Yeah. I just wanna. I know you guys mentioned that last statement. I just wanted to clarify what I think it means. So RSU basically just means like shares that you give to new hires, and since they're hiring like top talent, right? And they're not. I think the salary they're giving them is probably pretty good, but they're enticing them with shares.
Hmm.
So
Yeah.
that's probably what that expense is.
Yeah. That makes sense. That makes sense.
Harry, have you seen the line item 21, 933 versus 8, like compared to last quarter? What is that? I read it. Like there's a footnote number
The
7.
net loss, the right above net loss.
Yeah.
Okay. I mean the last what they mentioned in the last earnings was that they wanted to clear the old inventory because it was bought by previous management,
Mm-hmm.
and basically based on how they're building their model, they're trying to get better at basically predicting what it's going to sell for before they even buy it. So a lot of these houses were bought in like in the following years at rates that weren't really that competitive, and then obviously right then the interest rates rose, and then it affected the hard housing market. So it's like old inventory that was bad, like bought under worse conditions that they wanted to just roll over. So
Mm-hmm.
that's what that big number was, that 933. And I think they kind of got rid of those, so that's why it went down
I
last
see. Yeah.
quarter.
Yeah,
Yeah.
I also see something like that, that they were trying to get rid of the, like, clear the old inventory and everything, and that what's really gonna matter, it was the guidance that Cass was going to say. Now that they cleared the inventory, what's the real deal going to be now? Because remember,
Exactly.
yeah, I if I'm not wrong, the data of the houses and the balance sheet, whatever, it's delayed by a lot of a lot of days or months, correct?
Yeah, because
Mm-hmm.
it's everything that they had in inventory before he took
Yeah,
over,
yeah.
right? So,
Mm-hmm.
and
So
also the rates right? Because the housing market, and I think it's a good thing because the housing market has been pretty tough and it's like in a really bad spot. I think it's a great training ground for them to learn how to be resilient in a bad housing market, and then once it gets better,
Yeah.
that'll really like help them fly, right?
Yeah.
Because they have their lesson learned.
Yeah. And I mean, I think they did great. They did great these past few months. That was really tough with the Iran war and everything going up. The the rates getting back above to 6.5%, if I'm not wrong.
Yeah,
Yeah.
yeah.
And Real Open Army, I'm gonna send you this. I don't know if you want to read it. I'm gonna send it to you. Give me a second.
Yeah, send it. Thank you.
Or actually, Eric Jackson just posted this, which he
Oh.
explains it. I just send you the link, so check it out. And if you wanna read it, I think you're better at that than me. I'm really bad at understanding these things, so I don't know how to read none of that.
I'm not very good either.
Better than me. Better than me.
Yeah. Thank you. I'll check it out. Thanks, Harry.
Thank you. Yeah, appreciate it, man.
Yeah, of course.
If anyone else would like to talk or say anything, request, and I will accept you guys. Thank you so much to whoever has followed me. I appreciate you guys a lot. And remember, if you guys don't know, I'm actually live on YouTube, sharing the screen. So, and the link is in the comments.
I kind of wanted to share my thesis around this because I think I've seen different kind of lens of why, like how you kind of mentioned why you invested in it, and then the other person who left as a real estate agent. So I have an angle for why I invested in it, and so I'll just give you a little bit of background.
Okay.
So I work in data. I'm a data engineer.
Mhm.
So I understand a lot of this AI and data and cloud, all this stuff pretty well because I work in it. And then I actually invested in Opendoor. Like initially, my cost basis is like 52, 53 cents. So I got it very low,
Mhm.
and I got it at a point where basically there was a risk of the company was basically going to go bankrupt because they were under $1 and they had 180 days to get above $1. Otherwise, NASDAQ was going to take them off the exchange. So it was really like a lottery ticket type situation for me. But I also kind of looked at the intrinsic value of the company at the time. And now what they do is they've been operating since I think like 2014. So they've been in this iBuying space for a very long time. And they have all this information from all these transactions, right, that are combined. So there's a certain value to just the fact that they have the data that actually ties to real world transactions. And Zillow, I think Zillow did it, and then Redfin. All these guys have different information that kind of helps them out. But from an iBuying perspective, Opendoor is kind of number one there. So to me, as AI gets better and AI actually starts helping businesses improve, the companies that have this data moat, I would say, is like this actual data that actually ties to real world events, are going to get a chance to benefit highly. And then obviously then you put Kaz on top of it, who's a great operational executor, and he has proof of operating with his work at Shopify. I think this is a great opportunity. So you really have to think long term with this company because it can really change like the history of America in a way if they do it well, you know. So it's not,
Yeah.
I wouldn't look at it as like money flipping because it's not that type of company at all. To
Yeah.
me, it's you know. So
Yeah. Yeah.
yeah,
100% agree. Yeah, like I say, it's gonna be a long-term thing. You know, people want quick money. It's not gonna be like that. It's just not. It's gonna require a lot of patience. A lot of patience. It's in a rough sector, which is real estate, which obviously needs a lot of help. But I feel like Open Door is it's that. It's the help. It's that. It's what we need. revolutionize,
Exactly.
real estate in a way, and completely change it. And like he's getting rid of all management, all inventory. It's gonna take time. Once he's done that, now he can start focusing on improving things. But people's like, it's been almost a year since Cass has been here, and the stock price is not affecting. Like, bro, shut up. Like people are like, I don't know, they're really desperate. Like I say, I wouldn't mind if it stays at $5 the rest of the year, which I highly doubt it. But I will just keep
Yeah, I doubt
loading
it too.
and loading and loading price. Let me answer really quick one comment. Someone asked me on the YouTube comments, how many shares do you have? I can really discuss that, but I have 10,000 more. I don't know how to say it. Multiple 10,000s, if that makes sense. I don't know how to say it, but I can't really discuss how many shares I got.
Mhm.
Yeah, and we were going back to, yeah, I believe
Yeah,
Open Door is gonna revolutionize.
I'm in a similar position too. I'll just say how you said it.
Yeah.
But yeah, going back to what like I'm saying long term is like a safety factor, but it might not necessarily be long term. I mean, for me, based on my cost basis,
Yeah, you're
I've
good.
already done great, and I
Yeah.
wrote it all the way up to 11, and then I wrote it back to 4, and the whole time, because I had the longer term lens, I was able to hold on to what I believe this company will actually become and
Yeah,
open
yeah.
up. They're going to open up the housing market, because that's the whole point of AI is to create operational efficiency in a business,
Mm-hmm.
right? Once you start competing, essentially, like, if a person was going to be part of this process, this housing, like the process of buying and selling a home is so bad that like a lot of people don't even do it because
Yeah.
of how bad it is, right? And they're stuck. They want to sell a house. They don't want to go through the process of putting in all this effort to learn about how to do it, and then on top of it, all this time of it's stressful for folks too, right? They have
Yeah.
other things to worry about. So Open Door is taking advantage of cutting away all that, kind of like how DoorDash and Uber is, where you just press a button
And
and
Carvana,
right,
yeah.
and Carvana, right? So this is like the biggest example of that to me. And the if they do attach mortgages to it, the real estate mortgages are right. The return you're gonna get on a real estate mortgage is crazy
Yeah,
compared
yeah.
to a car loan, right?
It's probably
So
the biggest in the whole industry, in the whole market, probably.
by far, yeah.
Yeah. You're not gonna
And it's
compare a car. Sorry.
no, go ahead,
You're
go
not
ahead.
gonna compare a car that it's depreciating as soon as you drive it off the lot. That a house that it's eventually gonna keep going higher and higher with time. Like eventually, or that holds
Exactly.
price really well. So this is a winner in my opinion. We just got, like I said, we just gotta believe, be patient, don't let people discourage you. I feel like a lot of people get discouraged when they don't see big gains, or when they see a negative comment of someone that claims to have 47 years of experience. If you know what I'm talking, real open army. And then, and yeah, like they get discouraged by other people that they don't see the new vision. They still think that Open Door is just an iBuyer. So yeah, it's just, you just need patience. That's all you guys gotta do, basically.
Yeah, and think about the macro too, right? Because even right now, if you look at the market, it's at all-time highs,
Yeah.
but a lot of the software names haven't, right? They're low, but then there's a SaaS bucket, and then there's companies like Open Door. There's some other ones too that are trying to disrupt existing businesses.
Mm-hmm.
So it's not like SaaS, right? So SaaS is a service, a business service. That, yeah, AI may completely get rid of that, but AI is not going to get rid of your ability to buy a house
Oh yeah,
and sell
no.
a house,
Yeah,
right?
no. If anything, it's gonna make it faster.
It's going to make it
Automating was.
faster. And that's what they're going to charge for, right? Their goal is to basically become the default. He mentioned it in the last call. He said how there's like an acronym for the company, how you, like Xerox was fax, right? So we're like, I need to get a Xerox. He
Mm-hmm.
wants to turn it into a verb where someone says, I open door my home, and
Yeah,
they
yeah.
like both parties know what that means, right? And if
Yeah.
it gets to that level, like how Uber is, right? I took a Uber, I took a Lyft. We know what that means without saying this is actually what it means,
Yeah, yeah. No, definitely,
right?
yeah. They want to become the market maker. You need this? You want this? Here, Open Door has it all. No more guys in the middle. Other things. No, none of that. Which I believe that's where the real money is gonna start coming in. Not just flipping the house for a profit. No, that's not even the real the real point. If that makes sense.
Yeah, and he mentioned that. He said that that's part of it, right?
Yeah.
If they get a positive return there, that's great. But
Hmm.
their real goal is to turn it into a
Yeah.
service
Yeah.
that
Yeah.
people pay for.
Yeah, same thing with Carvana. Like I say, same thing. The real business wasn't the car. Yeah, they sell the cars, but the real thing was the titles, the interest, all those things, the margins, all those things. Like I said, I'm not really an expert on numbers and fancy words, but that's what I mean. That's the same thing with Carvana. Like the real business wasn't the car; it was more like the interest, like the how you call it, the titles, like the extra things, like the fees, services, all of that, all the good stuff. Same thing here with Open Door.
Agreed. I'm excited. I'm excited what they turn into. It's
Yeah.
great talking to you. Great being part
Yeah,
of this
I
group.
appreciate you, man. Thank you for
They're
your
playing
input.
nice music.
Oh, really? Oh, send me the link
Yeah.
so I can share it here. Because I was actually
Uh,
gonna look for that.
Just go to Open Door on X.
Okay.
They're live there. Thanks, Harry.
Yeah, of course. Thank you.
Thank you,
Guys.
man.
I
Have
like
an
your
amazing day.
perspective. Data just so important.
Yeah, I mean that's the real edge you have
Yeah,
with the AI use case. Otherwise, you don't really have the edge.
yeah.
All right, I have it here on the background if you guys want to see it. Reopen. You might muting
Yeah.
the music or
My
it might.
thing, yeah.
Yeah, because it sounds like too loud. It's like yeah. I'll just put it here if people wants to hear. I'll just put it a
There you
little
go.
low. Yeah. So this thing is gonna start. It's about to start now, in 10 minutes,
10 minutes.
and the earnings call is at 2:30, correct? Five.
No.
No.
2 is call.
Oh, really? Oh,
Yeah.
okay. I was getting confused. I thought the earnings call was at 2:30.
No.
All right.
If he is like Elon Musk, yeah, that's gonna be like 2:30, maybe 3.
or like Trump, he be saying he's gonna be live at certain time. He shows up like 30 minutes later.
Yeah.
All right, guys. If you guys don't know, if Open somehow hits $7.30, I'm gonna literally shave all of my hair. Like I'm not even.
Oh my
kidding.
God, your hair is long.
Yeah. Look, I usually get like a taper right here on the back, a taper right here, on the back, but I have really long already on the top.
Let me see. What is it now?
What do you mean?
The price.
550.
550. So we're talking about
150. 150. 153 move up. Which is honestly a $1.50 move is honestly possible. The reason, like, guys, like the reason I had to say about the price target was because of this. The prior move from the prior leg, it was a move of $1.88 over the span of a week and a half. If we can see it right here, for example, right there.
You're safe. I think we gotta move at least
Yeah.
33%.
Yeah.
The
Oh my
only
God.
way that we can move that high is that, guys, we're gonna launch the product or we're gonna start tokenization
Yeah,
stuff.
something. But
I
we'll
don't
see.
think that's gonna
But
happen.
hey, everything's possible. Everything's possible. So now, like I say, if we measure the prior move and we projected a breakout, which it was around here, as you guys can see, the target, something like this. I have done it over here. I have done it over here because I thought the breakout was around here, but I guess not. Yeah, we should push maybe to $7.20. We'll see. We'll see. Anything can happen. You know
I like to see you bald. I'm okay with that.
what happened?
I like to see you bald.
And guys, like the funny thing is that if it happens, I have 2 weddings the following month, and in one of those is for my uncle, and I'm gonna be the I don't know if I'm saying it correctly,
The man of the hour.
No, I think
Like
so.
not
The best, BEST, the best man. You
best
know?
man, yeah.
Yeah. And imagine I have a po.
Cosa.
Someone had said to shave my eyebrows too. If it hits 10 bucks, I'll shave every. Nah, I'm playing. It is getting really high in my room, but I don't want to turn on the AC because it's gonna be really loud on the microphone.
The dog's still sleeping.
Yeah, but he's on the floor. He's behind me now. He's with his belly. He sleeps like a frog with his legs, like with his
Feels
paw.
like bad earnings. I'm reading the comments on YouTube.
Yeah.
Looking at under $3.
Feels bad, like bad errands in under $3. I mean, honestly, $3 will kill a lot of people, in my opinion. But I wouldn't really mind it. But it will be kind of annoying. Honestly, it will be really annoying. Oh no, you should see the people on Weibo. Oh my gosh, do I fight and argue with the people on Weibo? I like it. You know, I don't like I don't know if you guys know me. I'm really chill. I like I'm a positive person. I'm trying to help whoever wants help. I'll try to help with whatever I know. You know, I'm not a professional. I didn't go to school for none of this. Everything was self-taught. I'm not claiming to be a professional or anything like that, but I know a little bit. And if anyone knows me, like you guys can ask me. You know, I will answer you guys. I will try to be, as accurate, reliable as possible. And I don't talk shit, but when people talk shit nonstop, oh my gosh, oh my gosh. There's a guy named Jeremy Boseman. I'm pretty sure a lot of people have seen him already on his comments. Oh my gosh, that guy is really really annoying. He's always posting like the little clown, like the emoji. You know what I'm talking about? Real open urban or no?
No.
No, he hasn't commented on your stuff.
What's his name again?
I think Jeremy Boseman, something like that. And he has like the photo of like a little clown, and he always posts this GIF
Oh,
on the
oh,
comments. And look, watch, if you're watching my stream, he always posts a little image of a clown like jumping like this. Oh my god! Oh, he's so annoying.
he's the Tesla guy?
I don't know. No, I don't think so. I don't think so. It's a nobody. It's a nobody, but he loves to talk shit every single time.
That post from Eric Jackson is pretty good.
Yeah.
I just read
You
it.
know what happened to George Noble? I haven't heard about my friend.
No, he's still there. You want to send a link?
Huh?
You want to send a link to him?
What do you mean?
Send a space link to him.
It's okay. He has me blocked. I can't.
Yeah, I'm blocked too.
He blocked me. Hold on, give me a second. He blocked me because I was like the time that he was arguing with Eric Jackson on his space. He blocked me because I went and comment like, "Oh, you claim to have 40 something years of experience, yet you cannot take some like the slightest criticism." Like, and he blocked me because of that,
Yeah.
bro.
Yeah, I used to like get into a conversation with people like that. Then I stopped.
Yeah, I don't look for it. Only when they come to my post, because a lot of people like to be talking shit on my post. Like the other day, I post, "Oh, Open is looking ready for the breakout," and yeah, the chart was looking like the breakout was here, on the 4 hour, whatever. And then it was when it dumped $8. I mean 8 cents. I mean 8%, like at Open. I think it was last week or this week Monday. I don't know. And they talk shit about that. Like, yeah, like I have a crystal ball that's gonna happen. Like, and they're so dumb because literally it recovered, and by the next day it was back at the same price. Everything that I post is a prediction, an educated guess. It's not like it's going to hit $6. It's going to do this. I can't because I don't have a crystal ball. I don't know if it's going to do that. It's a prediction. But they swear.
Mike Alfred is gonna be on the call.
Hmm?
Mike Alfred.
Oh,
I
really?
think he's gonna be on the call. He's gonna be like
Asking a
somehow
question,
on the call.
maybe? Yeah. I think I had seen that they were testing or something like that.
He must be very happy. Iron is doing very well.
I need to push at least 2 seats, but if not, my costs are gonna be cooked. But I got them for next week, so it should be fine. Either way, it was a gamble. It's the
Oh,
first time.
it's I
Yeah.
thought that was for
Oh
this
no!
Friday.
Oh no! I got them for next week just to buy a little bit of time, you know.
I have calls $7, but for when is it? October?
Oh yeah, he should be fine then.
Yeah.
It was like a little gamble, just you know, why not? When I bought 60 for like $11 or so, or like 60 something. I have like, let me see, I have 60, yeah, 60. My bad for the people that comment on YouTube. Like I forget it, and I'm not really reading these comments, but I'm checking them right now. But yeah, I appreciate everybody that came to say hi, that came to say that I appreciate my work, my input, my chart, whatever. Like it means a lot, you guys. You know, I do this for like, you know, for passion, because I'm passionate about this and I like to help and, you know, be useful in a way. So yeah, hopefully my charting or my analysis or whatever you guys see that I do, it's useful to you guys. Anyone else would like to request to join, to talk, to say anything? The earnings call should almost be here. There's 800 people watching the earnings call. 840.
That's low.
840. But it's on X. Probably on YouTube there's more, no? Let me check YouTube.
Oh, actually, no, that's X. I don't. Some people might be watching on YouTube.
Yeah. Oh wait, what? Hold on. There's 871 people waiting.
On YouTube?
Yeah, on YouTube.
So more on X then.
You know the only thing that I didn't like, and a lot of people criticize it, that
What?
I think the video that they posted on Instagram about like the little ad that they posted or something like that. I think it was kind of really bad. Of like that,
Yeah.
It was like, oh, my hobby, something like that. Doesn't like it when I go purchase or buy things, but and like I buy a house through Open Door or something like that. Like a lot of people criticize that the ad. I didn't really like it either. I felt
Oh,
it was
I
a little
see.
bit, it was a little cringe. It wasn't with effort, if that makes sense. But they were obviously testing things, so it's
Did
okay.
they take it down?
I don't know, maybe. I don't follow them on Instagram. I think so.
Yeah. X is the only social media that I use.
I have Instagram, but I don't follow them. For my
Oh,
Instagram.
has to
Oh.
any minute.
Okay, 4 seconds. Let's see what they do.
5, 4.
1, 0.
Hi, we're the Watsons.
We bought our house through Open Door,
Yeah, we sold our house through Open Door.
and we also got our mortgage through Open Door.
I'm gonna mute myself.
Yeah, that's okay. I have that.
We're excited. Our youngest is graduating high school, and it's time for our next chapter. So we decided to head up to Colorado, take a look at some houses, and see what made sense for us. And it turns out we fell in love with an Open Door house.
We found out that Open Doors buys houses as well, and so we submitted the offer online. I took some pictures of the house. I submitted that, and they came back with an offer that was really far better than we ever expected. So we took it.
When we started thinking about selling our house, we came up with a long list of improvements that we needed to make. We've been here for 15 years. We wanted it to be perfect.
Open Door just eliminated all that.
I
We
wonder-
got to focus on the next chapter.
Yeah,
which
it was
has been
perfect. Open Door also does mortgages. So they offered us this incredibly low rate. We took it and we couldn't have done better. It was so easy. Everything was seamless, and we were able to sell our house, buy a house, get it mortgaged all within a few weeks to make this move just so simple.
Hey everyone, welcome to Open Doors Q1 2026 Financial Open House Earnings live stream. I'm Michael Judd, Open Doors Head of Investor Relations. A few quick housekeeping items before we get started. And like all things Open Door, we're gonna do this faster. Details of our results and additional management commentary are available in our earnings release, which can be found at investor.opendoor.com. The following discussion contains forward-looking statements within the meaning of the federal securities laws. All statements other than statements of historical fact are statements that could be deemed forward-looking, including, but not limited to, statements regarding Opendoor's financial condition, anticipated financial performance, business strategy and plans, market opportunity and expansion, and management objectives for future operations. These statements are neither promises nor guarantees, and undue reliance should not be placed on them. Such forward-looking statements involve risks and uncertainties that may cause actual results to differ materially from those discussed here. Additional information that could cause actual results to differ from forward-looking statements can be found in the Risk Factors section of Opendoor's most recent annual report on Form 10-K for the year ended December 31st, 2025, as updated by our quarterly report on Form 10-Q for the quarter ended March 31st, 2026, and other filings with the SEC. Any forward-looking statements made on this webcast, including responses to your questions, are based on management's reasonable current expectations and assumptions as of today, and Opendoor assumes no obligation to update or revise them, whether as a result of new information, future events, or otherwise, except as required by law. The following discussion contains references to certain non-GAAP financial measures. The company believes these non-GAAP financial measures are useful to investors as supplemental operational measurements to evaluate the company's financial performance. For a reconciliation of each of these non-GAAP financial measures to the most directly comparable GAAP metric, please see our website at investor.opendoor.com. With that, let's get into the open house with Kaz and Christy.
Oh, let's see Kaz.
I opened the Q4 financial open house by showing you a clip from the Q3 financial open house. I did this because I think among the most important things you can do to build trust is to just do what you said you would do. Don't promise the moon and deliver dust. Just do what you said you would do. Our last open house might as well have been called the Look at the October Cohort open house. With that in mind, let's once again take you back to our last financial open house.
That the October cohort is going so well is not a plan, it's a proof point. The product launches I'm going to talk to you about aren't promises of things that might work. They're the explanation for why October happened and why it's repeatable. Now look, because we're committed to transparency, let me get ahead of a couple of things. October was not our largest cohort by volume, but it was about double the size of what we were doing just a few months ago. We're not getting lucky on a few homes in a friendly market. And given how the past few weeks have gone, I believe we're on track to significantly increase our acquisition size as we said we would do. What October shows is that the structural changes we made under Opendoor 2.0 are working. And then we're compounding those learnings into every single cohort going forward.
During that call, I told you that Opendoor 2.0 cohorts would perform fundamentally differently than Opendoor 1.0. And back then, some folks said October was a fluke, or that we'd fall apart when the markets got harder, or the sample set got larger. And one of my favorite investors said, look, Kaz, 1 month does not make a trend. That was fair enough. So here are the facts. We now have a few more months of data, and we should compare the first full 4 months of Opendoor 2.0 against the last couple of years of Opendoor 1.0. Don't pay attention to me, look at the chart. These are the cohort arrival curves. They show what happens when a group of homes margins on the y-axis as that group of homes sells on the x-axis. Every one of those purple lines is an old Opendoor cohort. They all do the same thing. They bleed margin as we sell through. Now, look at the blue curves. Margin doesn't drop the way it used to. This is a step function change in how this company operates. 4 consecutive months tell us something October alone could not. This isn't an accident. This isn't small sample luck. Mortgage rates are still far too high, and the listings are at all-time highs. But in a housing market that was supposed to break us, our cohorts are delivering. October wasn't a fluke. It was just the first month we could see it. We've now sold through over 80% of the October cohort, and our trends have continued. Margins for our core cash products have come down only 90 basis points from where they were at 10% sold to over 80% sold.
Nice.
Last year, that same journey cost us over 260 basis points. So we've seen about a 3x improvement. And then November, December, January, they all showed the same pattern 4 months in a row. In fact, Q4 of 25 and January 26 cohorts have the best combination of margin stability, and resale velocity of any cohort in Opendoor history, obviously excluding the COVID era. Our cohort curves, or the slope of our margins as homes sell through, are basically flat. And we're doing this at great speed. Every single cohort from October through January is selling faster than any corresponding cohort since COVID. And we're meaningfully scaling growth. In Q1, we entered into contract on over 5,000 homes. That's 2 times bigger than Q4 and 3 times bigger than Q3. In fact, when it comes to contracts, this was our single best quarter since 2022.
Nice.
Cohorts are performing better, resale velocity is improving, and we're scaling growth. But how can we do this? Well, let's talk about it for a second. 2 quarters ago, I laid out the blueprint and told you exactly what we were going to do. Underneath this all, there was one simple goal: make Opendoor faster. Last quarter, we graded ourselves and we're green across the board, and I promise we will do this every single quarter. So let's do that. Step 1, profitability. Break even by the end of 2026. We're on track. We'll be A&I positive on a forward 12-month basis by the end of the year. And as of April 1st, Opendoor is adjusted EBITDA profitable on a forward 12-month basis.
Oh, you guys heard that?
Unit economics that make the model work. Positive contribution margin while increasing velocity. We're on track. Our contribution margin has increased every single month since we bottomed out in September, and October, November, December, and January cohorts. They're all selling faster than any corresponding cohort since COVID. We're improving margins, speeding up clearance, and we're doing all of this in a worse market.
Nice.
Acquisitions are growing. In Q1, we entered into contract on over 5,000 homes. 2 times what we did in Q4, 3 times Q3. And our Q1 D2C acquisition contracts are up more than 4x compared to Q3 25. This was our single best contract quarter since 2022. Step 4, we're making really good progress on our capital-light products for sellers and transacting directly with buyers. Opendoor Checkout has now helped us sell homes in a bunch of states, and more than 1/3 of our acquisition contracts in Q1 were cash now, more later. This time last year, that number was exactly 0. That's our scoreboard. We're green across the board. This quarter, the scaffolding came down, and what's underneath is a company that finally knows exactly what it is and how it wins. For a long time, the core assumption of Opendoor was that we had to be better at predicting the future than the rest of the world. We operated like a prop desk. We looked at the macro and made directional bets based on where we thought the prices were going to be in 3, 6, 9 months. And then we pushed billions of dollars onto the table. The issue was never the people and not the model. The problem was the wrong problem to solve. Even if our models had been perfect, they were still pointed in the wrong direction. Everything flowed from a single question: where are home prices going? That one guess drove everything. It set the spread, which set what we bought, and determined whether or not we made money. And when we got the answer wrong, we blamed the market every single time. Macro became our excuse for everything. Look, when predicting the future is your North Star, the reflex in a down market is always the same. Widen spreads, slow down, pull back, pray for the market to recover. Every defensive mood fed the thing that was actually killing us. We were playing prevent defense when we were down by a touchdown. So of course we were losing. We widened the spreads to protect ourselves, but in doing so, we changed their funnel. We changed the thing that was making the company work. We got worse homes. Worse homes meant worse margins. Worse margins went back into the model. The system got more conservative and spreads widened even more. We didn't just have risk that we could not calculate. We actually built a machine that amplified it. Every move made everything worse. That was our fatal flaw. In a business where time is risk, the old model taught us to slow way down. And once that reflex exists, every department in the company, product, operations, finance, everyone starts running the same defensive operating system. The default everywhere was slow down just to protect ourselves. Look, I'm a nerd's nerd. I think models are really cool, but they're incredibly worthless when you have the wrong strategy. So what we did wasn't just improve the pricing model, we changed the question that it was meant to answer. A year ago, the most important input into every decision was our home price appreciation forecast. Today, it's how fast we can sell the home we're looking to buy. Market makers do not win by being right about direction. They win by controlling their exposure to being wrong. They win by being right about time. When a prop desk gets scared, it pulls right back. That's how the spiral starts. When a market maker sees risks, it does the exact opposite. It speeds up and prices to clear. The faster you move, the less any single home can hurt you. And velocity is how we know our pricing is right. A home that sits doesn't give us any signal. It just increases risk. Opendoor 1.0 was Kobayashi Maru. It wasn't a game we should have played. Without fundamentally changing it, we would have just totally killed the company. You don't beat that game by getting better at simulation. You beat it by changing the program. So we're now running on a Velocity OS. The difference is totally structural. We have rebuilt our engine around a totally stacked team of high-frequency thinkers, signal intelligence officers, hedge fund quants, and they're all maniacally focused on data loops. They have a mandate: ship a change every single week, optimized for both margin and velocity. And as our models get better, and they're getting better every single week, the whole machine moves faster. The whole company runs faster. We now run on a weekly cadence across the company. Products ship every single week. We don't need to be perfect in order for this business to work. We just need to be faster. With hundreds of acquisitions a week, we see pricing signals, renovation costs, and clearance patterns faster than anyone else in this market. Every home teaches us something. And every single day, we shave hold times, our capital turns go up, and our returns go up. Speed. Speed pays for everything. In a bad market or a great one, the variable thing that actually matters is time. So when you ask what has made the change, what makes this whole thing work, it's one word: faster. I wear a t-shirt at every financial open house that says one thing: faster. You can see it. I'm wearing one right now. Most of you think it's just a personality quirk, right? A founder nerd thing, a costume of a wartime CEO. It's really not. Look, we used to be in a business that lived or died on whether we got the future right. Now we're in a business that lives or dies on whether we move fast. Faster isn't just our competitive advantage. It's an absolute moral imperative. Let me just say this again so you don't think I'm being subtle about it. Faster is not just our competitive advantage. It's our whole reason for being here. It's our moral imperative. Every day someone is stuck and cannot move is a day in their life that they cannot move on. They're on hold. If we're in the business of helping people move, then days matter. It's in job offers they haven't accepted, a planned retirement put on hold, a family not started. The traditional home sale process is more than just inconvenient. It holds these people back. 40 million homeowners in this country want to move in the next 12 months, but only 1 in 5 think they can actually do it. Not because moving is too expensive, but because everything about it is just too uncertain. There's a simple test for any system. Would you design it this way if your family had to live in it? The legacy real estate system fails the test. It's our job to fix this. Every product decision Opendoor goes through one single filter. We only care about one thing. Are we returning time to people? Last week, across all sellers, Opendoor gave back over 100 years of time. Over 100 years of time. Over 500 families said yes to an Opendoor offer and reach certainty about 90 days sooner than they would have in a traditional process. You do the math. In just 1 week, we got rid of a century of human waiting. Time that got returned to families.
That is insane.
Who got to move
That's
on.
so fast.
Faster is a moral imperative. It is a good in and of itself. And that is what this company is for. Every product launch ultimately serves one question. How do we move faster for sellers, for buyers, for Opendoor, for everyone? So let me run through some product launches. This quarter, we expanded Cash Now More Later coverage. Every week, hundreds of families who would have heard, sorry, we can't help you, are now getting real offers. We totally rebuilt the foundations of our buyer apps. We acquired Doma's escrow division. Noah, our AI underwriter, prices normal homes in Phoenix now. We rebuilt every message a buyer gets from us. 6 different systems became just one conversation. We rebuilt our offer page, giving customers the type of information they would have gotten from an expert who was at their kitchen table. We also built a portable assessment scheduling. You can now get your home assessment done on your own terms. More than half of our assessments are now seller-led. 6,000 in March alone. We migrated our component library to an AI-native front end. While we were in there, we killed our legacy cake service. A transition that had failed 3 times in 4 years got finished in 6 weeks. The platform is what makes everything else faster. Talk to any Opendoor engineer, and they'll tell you this is a really big deal. We built an AI audit tool that automatically reconciles inspection scopes with actual repair decisions, giving our field teams real, actionable feedback to improve operator compliance and cost discipline. Title intake. It used to take us up to 5 hours. It now takes 15 minutes. We launched Opendoor Mortgage in Colorado. One of our marketing managers replaced our $500,000 lifecycle legacy email system with one Claude skill. A field manager in our Southeast division runs 5 states on Claude. A finance team turned 20 hours of SOX deliverables into 1-minute query. None of these people, by the way, were engineers. We also tripled our Cash Now More Later product. Our voice bots dropped seller contract time from 30 minutes to 5. We replaced 72 manual exports a month with one pipeline. We built a new listing operator consoles. In 8 days, we merged 8 different HR systems into one, and in the process, we killed dozens of point solutions. Now, that's not the full list. It's just what I had time for before they played the walk me off stage music. As you can tell, we've changed a lot, but I also want to tell you what we haven't figured out. Look, I'm a Leafs fan. I know what it feels like to be promised lots of things and get absolutely none of them. I know what it feels like to watch the same group of people over and over again give you false hope and give you nothing. I've thought about this more than I probably should, but I've decided that the promise is not the same thing as a proof. You do not get credit for what should have happened. You only get credit for what actually did. I know what it feels like to have momentum in March and tears in May, which is why this t-shirt says faster and not done. Faster is a setting. It's not a destination. We don't get to celebrate signals. Every quarter is just another shift for us. We're not done. We're not even close. Mortgage is live, and the early data is honestly going a lot better than I thought it would go. We're getting really good attach rates, and our customers love it. But look, it's early. We don't fully know how the product is going to work across different market conditions, in different home price tiers. We have a thesis. It's working really well, but we haven't proven it at scale. Cash Now More Later. It's growing really fast. It's over 1/3 of our growing pie. And that's just really remarkable for a product that didn't exist a year ago. And that was totally reworked just 3 months ago. We're iterating how it works. We're fine-tuning it, trying to get the balance right between what the seller gets and what Opendoor keeps. But let me be honest with you. every product that Opendoor ships has to earn its place in our portfolio. Cash Now, More Later is earning it, but we're not done changing it. And like we said earlier, the housing market, look, it just remains what it is. We believe the model we have built on Faster works across macro cycles. We're no longer dependent on a macro. We control our own destiny. October, November, December, January cohorts, they were all bought during the most aggressive expansion in our history. In a market that I don't think anyone would describe as favorable. And this is the best evidence we have. But that's just what it is. It's evidence. It's not proof. Proof will take more time, more reps, more shifts, more aggression, more products shipped faster. And we've said this before, and you'll always hear us saying this. We're not asking you to take our word for it. We're asking you to watch and to hold us accountable. Christy is going to walk you through the numbers in a minute. But before she does, I want to close with this. I've been asked a lot what Opendoor is. We changed our LinkedIn profile from real estate to software, but software is too generic. Look, Opendoor is on a mission. Our job is to get people who are stuck moving. We're a machine that helps America move. When I joined Opendoor, I did it because the home ownership matters. It is the thing. It is the single thing that leads to better families, better neighborhoods. When people buy a home they love, they're buying a share in this country. We don't buy homes at Opendoor to hold them. We buy them. We buy them so we can get them into a next family faster, with less friction, at a better price. And every family we help move is a family that is putting down roots. It's a neighborhood that is getting better. It's children that get to grow up in a home that their parents love. Faster is what this company was built to do. The t-shirt, that's just a reminder. The Opendoor machine is now running, and every day it runs, every single day it runs, friction disappears and people move. We do not need a better market. We just need a better machine. Last week, we gave back over 100 years. That's 100 years of human pain just gone. That's not corporate jargon. That's just families moving and building better lives. Please track it. Please hold us accountable. Christy?
Thank you, Kaz. I'm not wearing the t-shirt, but I promise I'll match the pace. 3 things to know about Q1 before we get into the details. 1, we reduced aged inventory from 51% to 10% in 2 quarters. The book is the freshest it's been in nearly 4 years. 2, margins bottomed out in September and have improved every month for 6 months straight. Q1 closed at 4.4%, up 3.4 points quarter over quarter, and we expect the upward trend to continue into next quarter. 3, acquisitions are up 45% from Q4, and Q1 was our strongest quarter for signed contracts since Q2.
I want to mention something really quick, guys. A lot of people may be, oh, where's the movement? What's not happening? If he's saying that we're doing well, that we're doing amazing, in my opinion, there's no volume. It's only 1.9 million volume. So let's wait a little bit. Maybe at the end, maybe the volume comes in tomorrow. Who knows? But it is super low. That's why we're not seeing nothing crazy. Let's just wait.
Let me walk through the highlights. First, scale acquisitions. We purchased 2,474 homes in Q1, up 45% from Q4. This is the second consecutive quarter of meaningful growth. And signed acquisition contracts, our leading indicator, tell an even stronger story. March was our highest single month for signed contracts since June 2022, and Q1 was our highest quarter since Q2 2022. An acquisition contract will typically close about a month later. Q1's 2,474 purchases are mostly from late Q4, early Q1 contracts. Late Q1 contracts will close primarily in Q2. Also, we want to be clear. We don't close on every home we go into contract on. Under Opendoor 2.0, we're deliberate about which contracts we take all the way to purchase, so the funnel narrows between contract and close. But more contracts mean more opportunities to be selective, and the trajectory matters. In a short period of time, we've gone from our lowest contract volume since COVID to our highest since 2022. This is the tempo required to achieve the goals we've set for ourselves, and we're building the volume and the discipline at the same time. You can continue to track our weekly progress on accountable.opendoor.com. Volume only counts if the quality holds, and our second management objective is the scorecard for whether we're delivering the right kind of growth. So second, improve unit economics and resale velocity. This is where the work really shows up, and there are 3 data points I want to highlight. 1, resale contribution margin has improved every month since September 2025, closing Q1 at 4.4%, up 3.4 percentage points quarter over quarter. 2, our Q4 2025 and January 2026 cash acquisition cohorts have the best combination of margin stability, and resale velocity of any corresponding cohort in company history, excluding the COVID era. And 3, the percentage of homes on the market for more than 120 days fell to 10%, down from 33% at year end and 51% at the end of Q3, a 41 percentage point improvement in just 2 quarters. Let me stay at this point for a moment. 2 quarters ago, more than half of our homes had been sitting on the market for over 120 days. At the end of Q1, that number was 10%. That is the lowest it's been since Q2 2022. To put it in perspective, the broader market was at 23% 2 quarters ago and rose to 33% at the end of Q1. We are now carrying a book that is materially fresher and healthier than the market.
Nice.
Inventory health is both a leading indicator of forward margin and evidence that our approach is working. A faster moving book means lower holding costs, less market exposure, better resale outcomes, and more efficient use of capital. And that's exactly what's showing up in our margins. This didn't happen because the market got friendlier. It happened because of tailored underwriting, disciplined close to listing workflows, and resale systems designed to move homes quickly while protecting unit economics. Third, build operating leverage. Fixed operating expenses were $33 million in Q1, down $2 million quarter over quarter and down $6 million year over year. Our trailing 12-month operations expense as a percentage of trailing 12-month revenue held steady quarter over quarter at 1.3%. We are holding the fixed cost base flat while simultaneously investing in the AI and infrastructure that powers our product, and it's worth pausing here for a minute. We're going all in on AI, and we're doing it responsibly. There's a lot of noise right now about companies blowing their 2026 budgets on AI before the second quarter. That's not us. We're focused on results, not token leaderboards. We have an internal Slack channel called Default to AI where teams celebrate measurable impact. Some highlights in addition to what Kaz shared earlier. An AI-powered repair negotiation tool cut our buyer fall-through rate by over double digits. Field managers are using AI scoping feedback, helping to reduce pre-list renovation spend by up to 10 to 20% per home in pilot markets. And a ticket triage automation redeployed 3 full-time employees from classification to resolution. What's notable is that most of these tools were built by operators, not engineers, using the AI infrastructure we've invested in. We're cutting waste and reallocating into capabilities that move the business. Our flat fixed operating expense is the output of that discipline, not the absence of investment. 3 objectives, 3 quarters of consistent progress. The plan is working. Turning to the balance sheet, we ended the quarter with $999 million in unrestricted cash, our highest cash balance in years. That's a product of 2 things: the strength of our parent level capital position following the work we did last fall, and the health of our inventory book. We held 3,420 homes in inventory at quarter end, representing $1.1 billion in net inventory. Our non-recourse asset-backed borrowing capacity remains robust at $7.1 billion, with $1.5 billion committed. Between liquidity, facility capacity, and the quality of what we're financing under those facilities, we have meaningful flexibility to execute against our plans. Now let me give you the guideposts for Q2. Acquisitions. You can continue to track our acquisition contracts on accountable.opendoor.com. We've updated our contract roadmap for the remainder of the year. The ranges reflect our current outlook inclusive of typical seasonality, and we'll continue to update them each quarter as we learn more. Revenue. Our Q1 increase in home acquisitions will start to flow through to resales, leading to expected revenue growth of approximately 25% quarter over quarter. Contribution margin. Our contribution margin bottomed out in September and has been improving every single month since then. We expect the contribution margin for Q2 2026 to fall in the middle of our 5 to 7% goal we shared in the first Opendoor 2.0 financial open house. Adjusted EBITDA. We expect Q2 adjusted EBITDA to be break even, plus or minus a few $1 million. And we see Q2 as an inflection point. We expect to be adjusted EBITDA profitable on a 12-month go-forward basis starting in Q2. In closing, last quarter I said you can't build a great business in a spreadsheet. You build it by shipping product, operating with discipline, and learning from the market. Q1 is what that looks like when the machine starts to work. Acquisitions, margin, resale velocity, inventory health, and cost all moved the right way at the same time. That's not a lucky coincidence. That's a system that's working. 2 quarters ago, we laid out our plan. Every quarter since, we graded ourselves against it and delivered. We have a lot left to prove. We intend to keep doing exactly that. With that, Michael, I'll turn it over to you for questions.
Great. Thanks, Christy. Our first question comes to us via video submission from Mike Alfred.
Oh, look.
Hey guys, it's Mike Alfred, founder and managing partner of Alpine Fox LP, as well as board director at Iron and Bakkt. Great job on the execution side. I really like the way the business is integrating AI into everything you're doing. My question is about the longer term implications of AI. Do you believe, when you look at the strategic direction of the company, that we are well prepared for all the things that AI is likely to change about the way the real estate market operates in the coming years? Thanks, guys.
Oh, wow. That's a great question. Look, I think the answer of this is like in a bunch of layers. And I kind of think about the layers, so let me just go through them. Layer 1 is the earning call answer. AI is important. We're leaning right in. We're spreading across the entire business. Like, you kind of hear that from every corpo CEO. I mean, it's true, but it tells you like nothing actually useful. Layer 2 is actually important. That's like the software leverage story. Like the original SaaS era, the insight was that you could take a CRUD database, wrap business logic around it, and some workflow around it, and then you'd find that people could do a lot more, right? Software would get cheaper, people could do a lot more, because you could encode the rules and the processes and the decision-making into software. And the leverage was just insane. AI extends that by quite a bit because you're now encoding judgment on top of rules, and the leverage becomes really high. Like, that's real, and it's important. And we're capturing a lot of this, but that's just the story of software broadly. It doesn't say anything specific about Opendoor. We just happen to be, honestly, just really good at this. Layer 3 is actually fundamentally more interesting. It's like the automation versus the collaboration split. Like, AI as collaboration software is very misunderstood. Let me talk about that for a second. Look, our goal isn't to use AI to cut 15% of our expenses by doing the same things we were doing, just cheaper, right? Like, that's automation applied to cost. And the goal isn't that like a black box replaces a human process end to end, right? That's just not what we're doing. Like, what we want to do, given everything AI can do, is to rebuild our processes from scratch, from a blank piece of paper, so that we can use AI to have a fundamentally different process. Layer 4 is actually our complexity as a structural advantage. This one is important to understand, and this is why we're not afraid of AI, is the way like some software incumbents are. Real estate is atoms and risk, and not just bits. It's also some bits. The underlying transaction involves a level of complexity and condition and local dynamics and human emotion, and all of it like makes a system very complex, and that's actually our advantage, right? AI doesn't eliminate this complexity; it just makes navigating it a lot easier. So what we don't need to do here is just get to some hypothetical end state, right? We just need to be meaningfully better than the alternative and the legacy process at every step. Like, this is a Red Queen's race dynamic, and it works in our favor here. Look, we've been running in this very complex environment for years, and we have a crap ton of operational knowledge, and that is deeply, deeply useful. Okay, last, I promised.
All right, guys. There's only 2 more people here on the space. Since basically most of the people just went to watch the lives on their own, which is perfectly fine. We're just gonna end the space here. I believe it was a great turnaround. We had quite a few people. I don't know, more than 30 people for sure, which it was pretty nice to see. Thank you to everybody who are new and follow me, and whoever say their kind comments. I appreciate you guys. I'm still streaming on YouTube, so if anybody wants to come and see him. And yeah, Reopen Army, anything else to say, brother?
Just thank you. Thank you very much. It was fun.
Thank you to you too for helping out. Appreciate you guys, and that's it. I'll see you guys next time. Appreciate everybody. Take care. Bye. Thank you, Sir Well and Roland, for watching. I'll see you guys next time.
FinTech, that's been true across the internet. It just hasn't happened in real estate. And real estate's like, honestly, the last major holdout, not because the category is fundamentally immune from this, but because the underlying complexity made it a little too messy to transact at scale. AI just totally removes this constraint. I think I should have actually started the answer by saying yes. But yes, we believe we're well positioned. It's honestly, on the inside, it feels as though our business was built waiting for this manna to fall from heaven. And it now has.
Great. We had a few questions submitted via Say Technology that all kind of clustered around profitability, so I wanted to pull out 2. The first comes from Heejun C, who's asking, you said in the last earnings call that turning profitable by the end of the year was achievable. Now that the first quarter has passed and interest rates remain high, is that still a realistic goal? Also, Arun Jacob V asks, how confident are you today in the Q2 positive EBITDA and year-end profitability forecast, and what are the key swing factors from here which might influence it?
So great questions, thank you. We reconfirmed our goal and expectations earlier on the call, and I'll say it again here. We expect Opendoor to be break even or profitable, adjusted net income profitable by the end of this year on a 12-month go forward basis. And Arun, to answer your question, we also shared in the call earlier that we're going to reach an important milestone on that path to profitability, in that starting in Q2 2026, we expect to be adjusted EBITDA profitable on a 12-month go forward basis. Our management objectives that we report every single quarter are the 3 legs to the stool that help ensure we're on the right path and we're building momentum. Acquisition closes are up. Acquisition contracts, the leading indicator to closes, are also up. In fact, Q1 2026 had over 5,000 contracts. That's the highest quarter of contracts since Q2 2022. Resale contribution margin has improved every single month since September, and we guided Q2 to the middle of our 5 to 7% targeted CM range. Long-held inventory went from 51% to 10% in 2 quarters. And we did all of this while holding fixed OpEx down. The last time acquisition contracts exceeded 5,000 in a quarter, our fixed OpEx was double where it is right now. Yes, double. And that's the AI investments and operator empowerment that we talk about every single quarter. That's what's happening here in fixed OpEx. We have made meaningful changes to what is required to run Opendoor 2.0, and we are beginning to demonstrate that those changes are durable as the volumes return. We're clear on our profitability goals, and we will continue to check back in every quarter with updates.
Can I add something here? I think Warren Buffett famously said you find out who's swimming without shorts when the tide goes out. I have 4 kids, and they actually sometimes go swimming, and I have to worry about them wearing shorts. So I feel for Warren. But right now, like, the tide is out in housing, right? In the real estate market, the tide is out. And most CEOs will tell you that they wished conditions were friendlier. I'm telling you the opposite. When I took this job, I knew the tide was out. That was the entire point. I didn't take this job because I was hoping macro would turn and it would bail us out. Like, I wasn't looking for a company of sunshine patriots. I think Kelly Clarkson famously retweeted Nietzsche and said, "What doesn't kill you actually makes you stronger." I chose hard mode. We choose hard mode because that's what's going to make us stronger. Look, we do not need permission from the Fed to put on our shorts to go swimming. Everything we've accomplished so far, everything has been done in the face of an unforgiving macro. And I think we've told you how it looks like when we're winning. And some of you are watching this. But I think I should tell you what it would look like if we were losing, if we could not do the things Christy said we will do. This is the thing most company CEOs don't do because they're afraid they're going to end up losing and they want to be able to hide it. But I want you to hold us accountable. Here's how you would know. Cohort curves start looking like they did with the purple lines. They would start high, would have massive losses as they went through. Contracts would plateau at the low end of our range or below the low end of our range for a whole bunch of weeks. And homes greater than 120 days on the market would go back to what we had in Q4. If those three things happen, if all those three things happen, then we're not doing what we said we would do, right? It's all about slope, acquisition, inventory health. That's the business, those three things. Look, I don't think any of those three things are going to happen, and I don't think all three of them are going to happen together because we believe we've built a model that works better. Faster is the key. We can't ignore the macro. We're not stupid, but it will never be our excuse. Good excuses don't make great companies, right? We control our own destiny. We don't need the market to recover. We don't need rates to fall. We don't need perfect conditions. We just need to keep moving more families faster and faster through a machine that's already working. So as I've said before, look, we're not asking you to take our word for it. We're just asking you to watch those three things that Christy talked about.
Great. Our next question, Andrew L. asks, as you accelerate acquisition velocity, how are you ensuring that underwriting quality remains high and that you won't need to raise equity to fund this expansion?
Thank you for the question, Andrew. It's important to know that we're not accelerating acquisitions by driving like blunt spread compression. It is driven by a combination of tailored underwriting that allows us to give really compelling offers to high quality homes, product expansion through our Cash Now, More Later product, geographic expansion, and just conversion improvements realized from such things as making improvements to the offer page. While we've removed the requirement for an in-person visit from pre-contract to post-contract, we still perform an in-person inspection before we purchase the home. This sequencing change helped remove friction from the contracting process, and it saved the cost of an in-person inspection for higher intent sellers without compromising our understanding of the home we're about to acquire. But what I just described isn't proof that our underwriting quality remains intact and high. The proof is in the cohorts themselves. Our October, November, December, and now January cohorts are each coming in with higher contribution margin, improved margin stability, increased resale velocity compared to their prior year cohorts. On the capital question, our cash position actually grew as we acquired more inventory, which reflects the underlying health of our inventory book. Younger homes with shorter days on market are structurally easier to.
Anyways, guys, I think we're going to wrap it up right there. As we can see, more volume is kicking in right now, which it's dumping. But it's really low volume. I really won't buy it. Like I said, I don't mind if it drops. If anything, I'll keep buying lower. But yeah, it's pretty volume kicking in. Let's just wait until they finish with the earnings call. And let's see tomorrow. I feel like tomorrow is when volume's really going to kick in. And then we can see the actual move. Because right now it's only like 2.5 million, which is super low volume. But anyways, I believe they're doing really good improvement. It's just, we got to be more patient and just wait. And yeah, that's pretty much all. Thank you guys for tuning in. I appreciate you, whoever followed me, whoever subscribed. And I'll see you guys next time.